Let's shatter the biggest myth about national debt right now. The myth is that it works like your personal credit card bill. You see, we imagine a mustache-twirling banker handing cash to desperate governments. But that's not how this game is played at all. Here's the thing. The global debt system is more like a giant circular mirror maze. Everyone seems to owe everyone else, and the money just spins. So, if every country is in debt, who actually has all the money? The answer is going to surprise you. Forget the idea of a single, all-powerful creditor nation. This isn't a story about China owning everyone, though they play a part. It's a story about promises, pieces of paper, and profound trust. Think about the U.S. national debt, clocking in at tens of trillions. Who does the United States owe all that money to? You might think it's foreign powers, but you'd be mostly wrong. The largest chunk is owed to, well, itself. Shocked? But wait, let me explain this internal circle. A huge portion of U.S. debt is held by federal agencies like Social Security. Imagine you borrow money from your own left pocket to pay your right pocket. That's what intergovernmental holdings are. Now, what about the rest? The public holds the other massive piece of the pie. And who is the public? It's mutual funds, pension plans, and individual investors buying treasury bonds. It's your grandma's retirement fund wanting a safe place to park cash. So, is the U.S. just in debt to its own citizens? Not entirely, because the global picture gets messy. Foreign nations and investors do hold a significant slice. But here's the twist. It's about a third of the total debt, not the majority. Japan and China are often cited as the biggest foreign holders. Why would they buy so much American debt? It's not charity, it's strategy. They get a safe asset for their massive savings. And the U.S. gets to keep buying their goods. It's a delicate, codependent relationship. But this just leads to a bigger, more puzzling question. If one country's debt is another country's asset, where did the real money go? We're talking about numbers on a screen, not piles of gold. Follow me down this rabbit hole. Here's the thing. Modern money is created as debt by central banks. When a government needs to spend more than it taxes, it issues bonds. Those bonds are bought by investors, including other central banks. The government gets digital dollars and spends them into the economy. So the creditor is often a chain of financial institutions. But wait, doesn't that mean the whole system is just made up? In a sense, yes, but it's made up of something powerful: belief. The entire global economy runs on the belief that debts will be honored. What happens if that belief falters? Look at the bonds themselves. They're just promises to pay later with a little extra for the trouble. That little extra is the interest rate, the price of trust. And who sets that all-important price? The market does. A vast digital crowd betting on a nation's future. So is the market the ultimate creditor? It's more like a Moody judge, constantly grading every country's homework. This brings us back to our original mind-bending puzzle. If everyone is simultaneously a debtor and a creditor, is anyone really ahead? Or are we all just running on a treadmill, chasing our own tails? The real power lies not with the entity holding the bond certificate. The power lies with the one who creates the currency on the certificate. That changes the game completely, doesn't it? Now, let's zoom out from the United States and look at the entire world stage. If we piled up every government, corporate, and household debt on the planet, the number is staggering. We're talking hundreds of trillions of dollars. So who on earth could possibly be rich enough to lend that much? Here's the shocking part. The ultimate creditor isn't a who, it's a what. It's the financial system itself, a self-perpetuating machine of asset creation. Think of it as a vast global ledger where every liability has a corresponding asset. For every dollar of debt someone owes, someone else has a dollar of financial wealth. But wait, that feels like a mathematical trick, doesn't it? Where did the very first dollar come from? That's the key to unlocking this mystery. Let's rewind to the foundation. Central banks, like the Federal Reserve or the European Central Bank, have a unique power. They can create money, essentially out of thin air, by purchasing assets. They do this by adding digital entries to commercial bank accounts. No printing press is needed, just a few keystrokes. This is how they become foundational creditors in times of crisis. Remember 2008? The Fed's balance sheet ballooned as it bought toxic assets to save the system. It created new money to become the creditor of last resort. So, are central banks the top of the food chain? In a way, yes, but their goals aren't profit. Their goal is stability, which keeps the whole game going. But here's the thing, they don't lend directly to governments in normal times. That's where the commercial banks and the public come back in. Private banks create money too, every time they make a loan. Your mortgage is new money created for you, which you now owe back with interest. So is your local bank your creditor? Technically yes, but they're also just a link in the chain. This chain wraps around the world in a complex web of ownership. Japanese pensions hold US debt, US mutual funds hold European debt, European insurers hold Asian debt. It's an endless, dizzying daisy chain of promises. Now ask yourself this: what happens when a country can't pay? Does a global repo man come to seize its assets? Not exactly. History shows us a different, messier process: restructuring, inflation, or sometimes default. When a nation defaults, the creditor takes a massive haircut, losing money. But that loss is just someone else's vanished asset. So the real victim is the pensioner or the saver at the end of the line. See how the pain trickles down? This brings us to a potent modern player: sovereign wealth funds. Nations like Norway or Saudi Arabia have saved massive surpluses from oil or trade. They don't just stuff cash in a vault, they invest it globally. They buy stocks, bonds, and real estate in other countries. They become major, state-owned creditors. But are they calling the shots? Their power is financial, not necessarily political, but the lines can blur. Imagine a country that owes its stability to the investments of a foreign government. It's a delicate dance of diplomacy and finance. But wait, we're still missing a colossal piece of the puzzle. What about the everyday person? You, me, anyone with a bank account or a pension? We are, collectively, the unwitting creditors of the world. Our demand for safe returns pushes institutions to buy sovereign bonds. Our savings are the raw fuel for this engine. So, in a bizarre twist, we are both the debtors and the ultimate creditors. Feeling powerful yet? You shouldn't, because we have little say in how it's managed. This system thrives on a perpetual cycle: new debt to pay for old debt plus interest. And where does that interest come from? It requires more economic growth or more new debt. It's a treadmill that has to keep accelerating. So, is the true creditor the future itself? Are we borrowing from tomorrow to pay for today, promising that tomorrow will be richer? That's a haunting thought, isn't it? Let's dig into what this means for power, control, and the very idea of money. If the creditor is a diffuse system, then who really holds the power? The power lies with the entity that controls the currency of the debt. Here's the thing: not all debt is created equal. Debt in your own currency is a whole different beast from debt in someone else's. The United States owes trillions in US dollars, a currency it can create. Japan owes yen, Britain owes pounds. This is the ultimate home field advantage in finance. But what about a country like Ecuador or Sri Lanka? They often borrow in US dollars or euros, currencies they can't print. Now, who's the creditor then? It's foreign institutions and governments with hard currency. And that relationship is far more dangerous, a true master-servant dynamic. So the real hierarchy isn't just about who owes, but in what currency they owe. But wait, this creates a paradox, doesn't it? The country at the very top, the one that can print the world's go-to currency, seems to have a free pass. It can create money to buy its own debt, a process called monetization. So, is the US the ultimate exception to the debt rule? In the short term, yes, this exorbitant privilege is a massive advantage. It lets the US run higher deficits with less immediate pain. Yet even this privilege has a hidden cost. The cost is trust. If the US creates too much money, the world starts to doubt the dollar's value. And if that trust erodes, the whole game changes. That's the invisible leash on every powerful debtor. Now, let's talk about the real puppet masters, the bond markets. They vote every single day on a country's credibility. When they lose faith, they demand higher interest rates as a risk premium. This can trigger a debt spiral overnight. Have you ever seen a country get priced out of the market? It's like a credit card company suddenly slashing your limit while raising your APR. You're trapped. So, is the faceless bond trader the true creditor king? In a moment of crisis, it sure feels that way. They have the power to topple governments without firing a single shot. This brings us to the referees, the International Monetary Fund and the World Bank. They often step in when a country can't pay its private creditors. But they don't lend for free. They become the new superpowered creditor with strict conditions. They demand austerity, privatization, and economic reforms. Structural adjustment is the technical term. So, are these international organizations the collectors for the global system? In many cases, yes, acting as both lifeline and disciplinarian. Their goal is to get the country back on the treadmill, repaying its debts. This creates a brutal cycle for the poorest nations. They borrow to survive a crisis, then slash spending to repay, often sparking another crisis. Where does the money go in this cycle? Right back to the institutions and investors in wealthy nations. It's a draining of resources, masked as financial rescue. Here's a chilling question. Has any country ever truly escaped this web? A few have, usually through painful defaults and economic isolation. But the cost is being cut off from the flows of global capital. It's a form of financial exile. For most, the only path is to keep playing the game. So we've mapped the system, the central banks, the private markets, the international lenders. But this still feels abstract. Let's make it concrete. Imagine a single US Treasury bond owned by a Japanese bank, funded by a Swiss pensioner's savings. That one piece of paper connects 3 economies in a chain of obligation. Now multiply that by millions. That's the global debt web, a tangible yet invisible architecture. And it's held together by one fragile element: confidence. What happens if one day that confidence snaps? We're about to examine the ticking clock at the center of this entire system. That clock is the relentless need for economic growth to outpace debt interest. It's the engine that must keep humming, or the music stops. But here's the thing: we live on a finite planet with limited resources. Can perpetual growth on a debt-based system truly last forever? That's the trillion-dollar question no one can definitively answer. Look at the trajectory. Global debt piles are growing faster than global income. It's like maxing out your cards and only making the minimum payment. But wait, nations aren't households, right? They have longer lifespans and the power to tax future generations. So, are we simply mortgaging our children's future? In a very real accounting sense, yes, we are. The creditor in this bleak light is our own posterity. We are borrowing from their labor, their innovation, their potential tax dollars. That's a sobering thought, isn't it? Now, let's introduce a new cryptic player, the future taxpayer. They don't have a seat at the negotiating table today, yet their unseen earnings are the collateral for every bond issued. This leads us to the ultimate escape valve: inflation. Inflation quietly reduces the real value of debt over time. It's a way for debtors to pay back creditors with cheaper dollars. So who gets hurt in that scenario? The saver, the pensioner, the entity holding fixed value bonds? In a way, inflation is a silent system-wide default on the creditor class, but it's also a tax on everyone holding that currency. Is this the system's built-in reset button? It seems to be a recurring feature, not a bug. History is littered with debts being inflated away. Yet this trick only works if wages rise alongside prices, and that's no guarantee. What we're left with is a colossal balancing act. On one side, the need for stability to keep confidence high. On the other, the unsustainable math of compounding interest. Something has to give. So, is a giant global debt reckoning inevitable? Not necessarily, but a transformation is. We're already seeing glimpses of it in digital currencies and new financial alliances. Could technology disrupt the very architecture of debt? Imagine a blockchain ledger where all sovereign debt is transparent and immutable. The creditor wouldn't be a shadowy market, but an algorithm. That's both a utopian and dystopian idea, depending on who controls the code. But the core question of who is the creditor might just become, what is the creditor? Perhaps the system is evolving beyond our old definitions. Let's return one final time to our original simple question. If every country is in debt, who's the creditor? The answer is a hall of mirrors. It's ourselves, across time and borders. It's the pension funds of today and the taxpayers of tomorrow. It's the central banks backing the system they created. It's the complex, interlocking web of global finance where everyone is both debtor and creditor. The real secret is that there is no external, all-powerful banker. We are all collectively the banker and the borrower in a dance of mutual assured dependency. The system is a story we all agree to believe in. And like any story, it can be rewritten. The power doesn't lie with a mythical creditor holding a giant leash. The power lies in the ongoing negotiation of value, trust, and the future we agree to build. That negotiation is happening right now in every bond auction, every central bank meeting, every vote. It's messy, it's unequal, and it's often invisible. But it is the most important conversation on the planet. Because the true creditor isn't in the past, collecting what's owed. The true creditor is the future, waiting to see what we will owe it. And that bill is coming due, one way or another. The end.